Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video, where I'm going to be talking about when what doesn't happen in the market happens. So basically, you see something that should be bearish and that market actually rallies, or something that should be bullish and the market sells off. What's that mean, and what's the importance? But before we jump in, if you've been enjoying my videos, be sure to subscribe and click the notification bell so you don't miss any new uploads. And if you find today's video helpful, be sure to hit the like button and leave a comment sharing your biggest takeaway. I love hearing your feedback. The weekend's coming up, so I'll have a chance to get through some of your comments and reply to them. Your support really does go a long way in helping me create more content just like this. So if you're getting value from my channel, want to see more, be sure to subscribe and we'll grow together. All right, so in my weekly training session for users of my software, this question sort of came up in a way where when you expect something to happen in the market based off of the order flow, okay, so meaning there's bullish order flow but the market sells off, or you have bearish order flow and instead the market rallies. Why is that happening? And I'm sort of going to take you through a couple examples and show you a basic one. Now, order flow is so robust, right? You have delta, you have point of control, you have imbalances. And probably the easiest way for me to show you this, and this is not the only way, but the easiest example that I could show you is with stacked buying and selling imbalances. Okay, so if you're not familiar with what a stacked buying imbalance is, it's basically three buying imbalances stacked neatly on top of each other. Now, it doesn't have to be three, but minimum is three for most traders. 3, 4, 5, 6, 7. If you have two, usually that's not enough to qualify as a stacked imbalance. Like you got two buying imbalances here. Really, you want to see three or more. And generally, after you see a stacked buying imbalance, right, the market will rally. Generally, if you have a stacked selling imbalances, which is three or more selling imbalances stacked neatly on top of each other, the market will sell off. Here it sort of sold off a little bit, then turned around and rallied. See the aggressive buying come in, you got a stacked buying imbalance, and the market went up. However, there are times when you have something like this happen. Got the red candle, pushes down, you got the selling imbalance at the bottom of the bar, and the market rallies. We will say, order flow, it's a scam, doesn't matter, doesn't mean anything, because you see here, you got aggressive selling and the market rallied. Well, you need to stop and think about what's taking place in the market, right? There's so many different traders trading for whatever reason. Some traders are getting into a position, some traders are getting out of a position. And, it's something that gets lost on a lot of traders. For example, traders that like to look at, the market depth map, they see liquidity up here, they see liquidity down here, and they automatically assume that's traders getting into a position like, oh, there's a big seller up here, right? They're not going to let the market go above it. Well, who knows? Maybe that person bought from down here and they're just taking profits. They're happy to leave it in there for when the market comes there. That's why, this resting liquidity that everyone thinks is going to hold doesn't hold, because it could just be somebody getting out of the position. And, it's nice to think that every order is somebody getting into a position, but at the same time, there are people constantly getting out of positions, okay? And one order by itself may not have any effect on the market. Meaning, now orders, like for retail traders, like all of us out here, and I say all of us, meaning, unless you're an institutional trader working for a bank or a hedge fund or a trading firm, then you're a professional or institutional trader. I don't say professional, but institutional trader, meaning you trade big size. Okay. So for example, let's just selling imbalance here, 99, 140, 14. So what is that? That's about 250 contracts. Is that for a big trader? That's not a whole heck of a lot, right? They'll routinely trade 500, 700, 750, 1,000, 2,000 E-minis, no problem, okay? And this could just be a big order that went through the market. Someone said, oh, yeah, you know what, just sell me 250 at the market. Okay, they know 250 is generally going to be swallowed up by the market pretty easy. It's not going to have much effect on the market. And maybe they're just getting out of a position. Maybe they're just what do you call it? Working it delta one trade, right? They're working it against something else, or maybe, who knows? We don't know what is going on in the mind of the trader that executes that. We could make a guess. That's all we can do unless we're the actual trader that is trading that order. Okay, so what do you have? Let's take it a step back. What do you have? Okay, I got a market that's kind of going, I don't say going up, but, right? We got a low here, hit it again here. We're starting to go up. We got this push down here. Okay, well, why, right? This is what you got to do as a trader. You have to think about sometimes of what is going on in the market. Why is something trading? And in this case, it's a bearish order flow, right? It's a selling imbalance. It's a big order that's going through the market. I don't want to say it's a stop because it's in an area that we had just been trading a few minutes before. No one is going to, get long in here and put a stop, a tick or two below where they got long. So it's probably just someone getting out of a position. I don't care. Just get out. Okay. I don't think it's fresh selling because we had just been selling, trading in there earlier. So to me, it's just someone getting out of a position. Now, okay, fine. If I'm going to make that assumption of somebody getting out of a position, to me, that should have really no effect on the overall trend of the market, right? Now, at the same time, when you see something like this, right, everyone always likes to use the term trapped traders. Oh, the market went up because traders got trapped here. Okay, again, it's 250 contracts. This bar traded 3,600 contracts. These price levels, some of them are trading over 250 contracts. So again, saying the market is rallying because there's traders trapped down here, usually when you have something like this, it's not overwhelming volume. It's not like 9,000 contracts are trading down here and everyone that was selling it down into these prices are getting stuck. No, it's just, to me, this is just a big order that went through the market. I won't call 250 lots a big order, but it's probably just an order that went through the market. Somebody, hedging something or getting out of a position, and it's not really having any effect. However, it is bearish order flow. Okay. And I have to keep that in mind because it is. Normally I'm seeing a stack selling imbalance. I'm going to see some follow through right here. We did go a little bit lower, but we're not going any lower. In fact, this bar, even though it's still a red candle, it did close off of its low, right? It's not closing somewhere down near its low, and it's definitely closing above the stack selling imbalance. Okay, so I have a stack selling imbalance, which on the surface is generally bearish information. And I see the market is just completely ignoring it. And this sort of comes back to a more broad general statement. And generally, if you're in a market that's got directional flow, especially a technical market, right? Because generally, if a market is, I don't say directionalist, but is following the technical analysis of the markets, like trend lines and triangles or all that other stuff. That's like a normal market condition. But when a market is trending, it will sort of ignore and plow through whatever technical levels exist. Okay. And same thing with order flow. If you have bearish order flow and the market is not respecting it for whatever reason, again, in this case, to me, this reason is just someone getting out of a position, nothing more. It's telling me that, hey, you know what? Even though we got this bearish information, the market's ignored it already, right? Because again, if the market was thinking that this is like an important order going through the market technically should be trading a little bit lower. So if I see a stack selling imbalance and the market instead is trading above it, at least immediately in the next bar, right? That's not a good sign. You want to see a stack selling imbalance like here and the market trading below it. But if I'm seeing that the market just completely ignores it, to me, that's an important piece of information, okay? Because, again, when the market, when you have expectations in the market for something to happen based off your analysis and it doesn't, it's crucial, okay? You have to be prepared for that, basically because, now it doesn't mean that your order flow is wrong or your analysis is completely wrong, but it's feedback you're getting feedback immediately from the market that there's something else going on, okay? Because again, if something else is going on, sort of a bigger thing, then when what you expect to happen doesn't happen, you go with what is happening, right? So I say, order flow is best utilized as soon as possible, right? You want to take advantage of it. And this is immediate feedback from the market. Stack selling imbalance should be bearish. Market keeps going up. What do you think you want to do? You want to be long. Okay, let's take a look here at Nasdaq, because you're going to see it more in markets that are a little bit more volatile, like MNQ or NQ. Here, let's go take a look here. How many do we got here? Now, this is a 30-second chart. I use a 30-second chart on Nasdaq just because it's a bit volatile. Here, similar thing. This one was 928 or something. Yeah, 928 this morning. Let me just go back to that E-mini, see what time that was here. Okay, same time, 928. So again, market's generally correlated, right? Stack selling imbalance, market went up, right? Let's take a look at earlier. Okay, stack buying imbalance, market went up. That's what you expect to see. Stack selling imbalance, market went up, down. That's what you expect to see. But look at this right here, 9 o'clock. Well, there's a couple here. Down here, this is 8:53. All right, let me expand this chart up a bit more. Boom, market's selling off. Boom, and then it just pukes out. Somebody just came in, just get me out of my position. Stack selling imbalance. Okay, why isn't the market going down, right? Market's been trading a little bit lower, broke out down here. Maybe there's some stops. Who knows? Whatever. But that's bearish information, and instead the market rallied. So next bar, we're trading inside, right? We got a big red candle down. Next bar can't go any lower. Can't even take out the low of the previous bar. Market starts to rally. That is your sign to get long. The market is giving you immediate feedback. You have bearish order flow coming in here, but the market's not going down. Instead, it's going up. That's your sign to be getting long. And look at this. It goes from, 904 basically all the way up. We hit the new highs up here. I don't know. No, it's not the highs of the day, but it's a nice move. It's a 50-point move. Got all the way up to 54. Now, I'm not saying you get 50 points. Maybe you get 20. That's great. Then you got a stack buying imbalance up here. Green candle. This is the opposite. Strong aggressive buyers right here. Look at the top of this bar. You got stack buying imbalance in here. Stack buying imbalance in here. Continues powering on. Get up here. Who knows? Maybe it's a stop that just got triggered up here. Market went up, came back down. Next bar, trading below that stack buying imbalance. It opened near its high, traded up 2 ticks to the bottom of that stack buying imbalance, but then sold off, closed on its low. What do you think the market is telling you? It's not interested in transacting at these prices up here. So again, bullish information up here, just as the previous bar. Hey, I got a stack buying imbalance. Maybe a market can go higher. I got a stack buying imbalance. What market's telling you now? No, we're not going higher. The market's reversing. And even if you just traded for 30 seconds in this bar here, you got short on the open at 942. Where'd it close? 928.5. What is that? 14 points, 12 points, 13 points in 30 seconds, right? Market often gives you this immediate feedback. Now, here is one, right? Market did start to go up. Right, stack selling imbalance, expect the market to go down. Market went up, okay, closed back down inside here. Again, it's a little bit different than the previous bar where stack buying imbalance in here, and then the next bar was just a huge bar down. At least this one sort of retraced it back, even though it was still a green one. Okay, and again, if you're buying it in here at 933, you get stopped out here at 928.5. Okay, fine. But you want to catch these bars like this big one down here, right? Or moves, obviously, like, you can catch this bar here. If you caught just this one bar here, getting long here at 04 to 11, maybe carried into the next bar, this 15, 16. These sort of trades happen all the time. Now, I'm just using stacked imbalances as one way. There's other things in the order flow that also give you signs like this, but it's just easier to talk about stacked imbalances because most of us are already familiar with them. Okay, but all the other information. Point of controls can be used, deltas can be used, max min deltas. Order flow information is so robust, and that's the beauty of order flow. Not many traders are using it. I mean, who would get long off of this bar here, this red candle, then this green candle? Who would get long off of that? Not many traders. But if you're looking at the order flow, okay? So thanks for watching this video. Again, if you got something useful out of it, be sure to leave a comment down there. Give me a thumbs up, in the comments. Say, hey, good job, nice video. Or if you disagree, say, I disagree with what you say. Okay, fine. That's what makes the markets, disagreements. If everyone agreed, the markets wouldn't move. It would just trade one price. So thanks for watching, being a part of my order flow community, and I'll catch you guys on the next video. Bye-bye.